Greetings, guys. How's everyone doing today? Let me fix my camera real quick. All right. I wasn't expecting too many people to join today. I know 2 p.m. is a little bit of a weird time, especially on a weekend, on a Sunday. But today I'm going to be doing a weekly prep with you guys. Told you guys I promised I would do more of these live streams on YouTube and want to focus on doing once a week, eventually doing 2 a week, maybe 3 a week in the future. But I figured today would be more focused on the weekly prep based on the weekly plan that I've provided with you guys, both on the indices and on individual names. Now, with the watch lists in mind, especially once we get to the individual portion of it, keep in mind that these watch lists aren't meant to only be valid and viable for that specific week that I put it out. So the names that I put on for last week or even this week doesn't mean that they only need to play out for last week or for this week. You can continue using these weekly watch lists on the individual names long as the analysis is still valid. There's a reason why most of the time I provide you guys with contracts that are more longer dated for monthlies or bi-monthly or even 3 or 4 months out, based on the analysis and the fact that we may need to see more time for this analysis to fully play out and come to fruition. That's the whole idea of these weekly watch lists. Although every week I do like to add new opportunities to the list, so very rarely do you ever see me put the same ticker on the weekly watch list 2 weeks in a row, just due to the fact that I like to provide more opportunities every week. Obviously there may be a new opportunity that we can look at, and this kind of just allows you to capitalize more on prospective moves in these names. So we'll start off with talking about ES and SPX. This week, you should expect a little bit more volatility. We have a very data-heavy week. I believe we have data prints coming in almost every day of the week. Big ones to watch out for are going to be jobs, ADP, PCE, personal spending as well, home sales, or the home price index, and then we have a couple of unemployment data releases this week. So definitely expect some volatility. Lots of interesting things to watch out for within the next coming weeks. It's interesting, once I finished making my weekly watch list, I actually didn't even realize that it was mostly fintech related, funny enough. Affirm, PayPal, Visa. They all look pretty decent. I'll dive into that more a little later. But it's interesting to note that, especially with consumer spending, consumer confidence, all these things are pivotal and key for GDP growth, and it's going to be key in terms of tracking macroeconomics down the line. With higher interest rates, things obviously are more expensive. Things are costlier to borrow. These are all simple macroeconomics that you can apply to your daily lives, right? And then now pair that with inflation and things like that. So to start off with ES, I'm giving you guys 2 pivot levels for the week. Okay, and for ES, the pivot for upside this week is going to be 44.65.75, which is right around here. This level here, this orange level that I have here. And then the downside level is 43.30. This is going to be the same downside pivot as we used last week. The reason why is because this 43.30 level is extremely key within this entire range. In reality, you can honestly even use 43.35. But once we actually break down from that range, we can likely fill the gap that occurred from the rollover on the contracts and possibly even get down to mid 4200s. Now, as I said in my last stream, even if we do pull back another 100, 150 points down into the mid 4200s, on a macro level, this is still bullish. We're just printing a higher low on a macro time frame. But aside from that, in terms of short term, we've failed to get back above 44.93.75, which is a pivotal level for this structure to hold. Once we got below that, you guys can see where this level comes from. Okay, this is from the high of June 16th. Notice the rejections that we had throughout this entire range for about 3 or 4 days before we rejected and pulled back, and we started to build this ascending triangle. We finally got the breakout, rallied all the way, came back down. Mind you, it's this orange level here. Retested it, bounced again, Now this level did an SNR flip, support and resistance flip, which was previously resistance, now turned support. Okay? We chopped around within this range for a while before we finally broke down, and we saw a move down to 43.50. So last week, we tested just shy of that level once again, and we rejected and dumped again. So this is going to be a level in short term that you want to watch. If we do get back above 44.65.75 for this week, you can probably expect 44.93 to get tested again, and then we see from there. Now, if we take a look at NQ, NQ was a very straightforward analysis that I gave you guys last week, and basically said, look, this green box is pivotal. Told you guys on Thursday that it was pivotal for the rest of the day and into Friday. What happened? We broke it, dumped further into Friday. Jackson Hole Day, we printed another local low before we bounced into the close again. So you can continue using this green box. Guys, keep your trading very simple. All I did was draw a green box for you guys based on a supply zone, right? This is going to be your support, and it's very evident to tell in terms of where the price is reacting. Once this breaks again, you can likely see lower. What I'm kind of expecting is that we can continue this rally for quite some time, maybe another week or so, into the holiday and likely even after, and then we see what happens from there. I do expect lower still, but the move that I'm really looking for is going to be that break of 43.30 on ES. Okay, I'm going to discuss SPX now to give you guys an idea. So with SPX, like I said last week, 45.98 level that I provided a while back, we never saw that again. That basically marked the top, which is why I had labeled that level checkmate right when the BOJ news came out. We have since pretty much given back the entire rally that we started at the end of June. Lots of people on Twitter are starting to call this a head and shoulders. I personally don't think this is a head and shoulders. Is it bearish? Yes, but it's not a head and shoulders. I'll tell you why it's bearish. I'll also tell you why it's not a head and shoulders. Let's start with the head and shoulders part first. Head and shoulders are typically very clean. We have essentially a pennant breakout from this range, structurally speaking. Okay, broke out to the highs, came back, and now we retested a rejection, and I'm going to show you exactly what that level is before coming back down again. Can this be seen as a head and shoulder? Sure, if you want to look at it that way. It's not the cleanest, but I'll give you even a better analysis on what I see and what I would call it. So you guys know the pivot level for this week for upside is 44.59.17. You guys also know that we've used this level many times before as pivotal downside pivots in previous watch lists. And you can see on Thursday, we rejected that level almost to the cent. We missed it by about a point, and we gave everything back once again. And from that 44.59 level, we were able to shave off 100 points within 24 hours. So I'm going to copy that and paste that in this clean chart to give you guys an idea. Let's make this more bold. Okay, 44.59.17. You guys see how pivotal this level is and why it's so key in terms of looking at this from a trend perspective. For us to be bullish, we would need to be above this level. And by bullish, I mean continuing higher into a break of this previous high. This was basically the level that we were watching for weeks to see downside movement. And we did. We first got a fake out and a bounce, right? SNR flip once again. We got this little hammer print. Then we reversed all the way and broke the level. So same thing applies for this week. This is why this is the upside pivot. If we are able to get back above 44.59 again, I'm expecting 4,500 to come. And as of right now, 43.29.92, which is the downside pivot that I gave you guys last week, is going to be the same pivot level for this week. I'm going to show you why. Let me copy this level, paste it on this clean chart. This is essentially going to be that neckline that everyone is talking about. Okay, 43.29.92. Once we break this, we're expecting this range to be tested again. And I'd like to see a lower test into the bottom ranges as well. Okay. And even if we do pull back all the way to sub 4,200 or even into the mid 4,100s, this is still relatively bullish. right? We haven't really broken any trend. And to see this type of velocity on the upside previously, I would like to see the same completed on the downside. Right into this demand zone here. This is what I'm looking for. Okay. So these are your two pivots for the upcoming week. Very simple. You guys already know we always have levels in between. So we never come into the day with a certain bias. Even if I'm bearish, I'm not going to come into the day trying to short every bounce, right? We come into the day, we don't get married to price. We look at the chart. If the day looks bullish and we're still trading and ranging between these two levels, just play level by level, right? Once we break one of these levels, you know that the trend is pretty much confirmed. And from there, we have to see how far we go, depending on the time of day, the day of the week, etc., etc. Now, if we move on into individual names, I'm going to go over XOM. So oil names look relatively bullish at the moment. We still need to get above these highs on XOM, but I do like the fact that we flipped SNR here off this range and we reclaimed it. Now we're bull flagging off the support as well. So we can at least see a move back up into this gap fill area into 113, 114. If you guys actually take a look at CL, looks pretty bullish, right? We actually bounced off a macro trend line that I have here, this dotted one, which connects the lows of 1999 into the low of 2001. If you extend it all the way out, you can see how well this trend line has provided reactions over the course of 20 plus years, right? You have a test of it right here in 2009. You have a couple tests and bounces off this in 2015. Once we broke down from it, you see bearish retests on this in 2015 as well. Fast forward, this is now 2016, right? 2016, the end of 2016, chopped around along this entire trend line here. Now we continue to fast forward. This is now looking at 2019. And then once we broke it again, oil dumped into 2020. And then now, once we're back into 2021, you see the same breakout of that trend line here, then a bullish retest right off the trend line. And then it pops again. Okay. Now, fast forward into this year. You have your initial pop. This is based on another trendline resistance that I've extended out. I can go and look at this with you guys after this. We retrace the entire move. Bounce right off this trend line again. Remember, this trend line was drawn from 1999. So this trend line has been respected over time for over 20 years now. And if we go into lower time frames, okay, we have now, looking at it on the daily chart, we have now been able to reclaim this area, reclaim this structure, and now we are trading right around this structure while we're bull flagging. So once we get a move up here, this should be able to confirm some upside for the next month or so, which brings me back to XOM. Okay, a break above this range is going to bring us to all-time high. Of course, we don't have confirmation yet in terms of the breakout, but based on what I'm seeing so far, the RR is good here. Unless we get a structural break of this bottom demand zone, I think XOM is bullish, and we can likely see all-time highs probably within the next 2 to 3 months. But a test of this this 113, 114 area, that's likely going to come within the next month and a half. The next name that I added for you guys was Affirm. Affirm is an interesting one. You guys know that I've been watching Affirm for quite some time. Let me actually go to this chart. All right. So Affirm and ER, they did well. They also raised guidance. One thing that's really key to know about Affirm at the moment is that this is actually the highest volume day, second highest volume day that it's had in its entirety of trading, historically speaking. The highest volume day that they've had was February 2022. This is now the second highest volume day, the third being May 2022. So fundamentally speaking, in terms of financials, Affirm isn't really in a good spot. I mean, they're increasing revenue, they raise guidance, things like that, but they're taking losses. They're net loss in terms of financials. But the chart looks good. I mean, we can probably see Affirm make a move to 26 within the next 6 months or so. You know, this volume is very telling, and kind of confirms the price that day as well with this candle print. So this is definitely something I'm watching. Even for longer dated contracts, you can even take 6 months out if you really wanted to. They're relatively cheap. You can go, 20-30% of the money and still pay under maybe $4 or $5 a contract, and capitalize on this move. Very similar to how we kind of took Carvana and we basically bought a 4-month contract on it for November. Although we sold early, those contracts ended up hitting 2,000, 3,000% by the time it finished its entire rally. So similarly, I do like Affirm. The thing with Affirm, like I said, is financially they're not that strong. Although their revenue has increased, it doesn't help them with the fact that rates are also high, and we're now seeing the theme of higher for longer, because it's also costlier for consumers to now borrow, right? But it's also costlier for a firm to lend out money. It works both ways. So definitely something to pay attention to. We also have PayPal on the list for this week. With PayPal, I do like PayPal off these lows. When I first looked at PayPal back in December of last year, I was kind of expecting this entire move from 2017 to kind of fill on the downside. We haven't really completed that entire move, but it doesn't mean that we have to. At the moment, I do think PayPal is pretty undervalued compared to its competitors and other relevant names in the industry. We have a pretty nice bullish divergence off these lows. This level, the 58.95, is going to be key, which is also our invalidation for the week on calls for PayPal. Okay. Can we use this low from Friday, August 18th, as an invalidation point? Yeah, you can. However, the low from May 26th is more significant than this low. If we're not able to hold the low from May 26th, we are not going to hold the low from August 18th. And we're likely going to see lower after that. So the R is pretty good here. You're looking at a 2-point stop and a validation point from here. I do like the upside potential. And even on a short-term basis, especially for this coming weekend, even for day trading, this is all we need to see hold, right? If this structure breaks here, this green box, you're going to see the 58.95 tested again. But as long as we hold this, we can see higher, even fill this gap into 63, and then the other targets that I provided you guys on the watch list. Okay. So yes, the invalidation point that I put, a break and hold below 130, is obviously a typo. I usually just copy and paste my weekly watch list and then I change everything else. But you guys should know, I said, long as it holds a 526 low, it's bullish. So you can use that as your invalidation point. The last one that I wanted to take a look at is Visa. Now, I typically don't trade credit card names, but I do like Visa a lot, especially with the fact that consumer spending has been trickling higher in the past reports. I think with consumer sentiment or confidence that we just had on Friday? It was what was it? Consumer sentiment that we just had. I think that may have been the first time it came in lower in the past couple months at least than I expected. But if we actually take into account when we take a look at Visa and even MasterCard was obviously one I was looking at as well. I do like Visa a little bit more, but you can kind of play both. They're all pretty bullish on the charts. But in terms of Visa, credit card debt has been rallying this past year. I think just within the last report, it's already increased over 16 billion. And with every rate hike, interest rates on credit cards are trickling higher as well, right? Every 25 basis points that's raised on interest rates, you should expect your APR to raise by 25 basis points as well. So you couple that together, and then you couple with the fact that people have high debt, so they're likely not paying off their full balance. and you also add the fact that consumer spending has been high, right? This is a money making machine for credit card companies. And that's my basis on a fundamental level in terms of how we can likely see all time high on Visa. Now, we also have a bull flag that we're trying to break out of on lower time frames. Looks beautiful. I mean, this is obviously a trend up, right? You have your higher highs, higher lows, okay? This is trending, right? And a slow grind like this in consolidation is going to have a wave that's going to send it above all-time high. A larger leg that's going to send it above. So I do like Visa. Again, you can play MasterCard as well, maybe even AXP, which is American Express. We can take a look at that. American Express actually looks a lot worse. Way worse than Visa and MasterCard. You can pass on this one. But Visa and MasterCard definitely look a lot better in terms of breaks towards new highs. And this is what I'll be watching for that. That's pretty much it. I think that's all I got for you guys for the weekly prep. We can look at some individual names that we had last week. Actually, let's take a look at PFE again. PFE is still holding this trend. You guys know I added this to the watch list last week. This should be able to get a nice breakout of this range within the next few weeks. I'm pretty bullish on COVID names. Mask mandates are now starting to become true. A lot of places are now reinstating it. Schools. I think most of them have been schools at the moment. I think there was one school that I saw on Twitter that actually just closed down the school for a couple days because lots of the staff were getting sick. So mask mandates are definitely starting to come back a bit. And we're going to have to see how that develops. Timing-wise, I mean, it works out perfectly because, you know, flu season is pretty much right around the corner. It's when people are most vulnerable to getting sick. Do I really care about if we go into another lockdown? Not really. But I do want to be mindful and aware of the news that's going to impact the markets when that does come. So PFE is going to see some movement soon. APT is another one, which is interesting. APT, if you guys remember back during 2020, 2021, we played this name a few times. They're the ones that make the masks and N95s. So you can see this pop that we had last week. All right. Again, price tells you things before it hits headlines. And this is one of them. So obviously people are very bullish on APT, which means people are expecting mask mandates to come back, which means people are going to be buying up masks again. Okay. So APT, I don't plan on trading this ticker, but just something to watch out for future reference. Okay. And then Myrna as well, you can kind of couple that with PFE, although I do like PFE a little bit stronger. I think Moderna still has to get back above this range that we've discussed in the past before I can fully confirm that I would take longs, but it does look pretty good. So we can definitely see a break back above this range, which is pretty much above 120. And then see higher from there. Can we check Tesla? Sure. Tesla. So I pretty much gave you guys the bottom on Tesla last Friday. Not this past Friday, the last Friday. And from then we got to move from 215 all the way to 240. Same week. Right now, still looks pretty bullish. This can likely see continuation. We just broke out of a bull flag into the close on Friday. And we can likely target 243 and into 250 on this move. So I didn't add Tesla to this week, mainly because I pretty much gave you guys the bottom the week prior. So we can obviously day trade Tesla. But in terms of swings, your best RR was when I called it out on Friday. On those 220 calls. I think one of the guys in the group took 240s for 1,000% from Friday after I sent that message. So great job. Any other questions? DXY is pumping. Yeah, DXY looks pretty bullish here. Oh, DXY looks pretty bullish here. So keep in mind when you're tracking DXY in terms of relevance to the markets. All right, awesome. If there are no more questions, I'm gonna make it an early stream. Have you guys enjoy the rest of your weekend. For me, the weather is beautiful here, and it's Sunday, so get some rest, spend some time looking at the charts to study and practice, and then come into Monday prepared. You guys should always be spending time on the weekends to practice and improve your trading acumen. There's no reason to not spend at least an hour or two on a weekend to do so, right? If I can spend a few hours putting together a weekly plan for you guys and watch this, you can spend an hour just reading it and digesting it, taking notes, spending time practicing, looking at the chart yourself to see how it compares to mine, things like that. You think SPY is doing well with DXY strength eventually weekly consolidation coming on DXY? Well, I mean, market has been pulling back while DXY has been bumping, which is typically inversely correlated anyway. Right? We just got a massive breakout of this bull flag off the lows from on DXY. So next target is going to be around 106. And above that, we can likely see 110 again, 108 to 110. Yes, I just went over Moderna. Someone is asking about Groupon. Groupon. Here's my take with Groupon. I mean, the chart looks phenomenal. Maybe not an entry here. I think the entry is kind of gone. Your entry is obviously down here around 8 or 9 at least, off the breakout of this consolidation and bull flag. The chart looks phenomenal. My question is, how many people still actually use Groupon? And I would have to look into that more in terms of fundamentals, because I haven't used Groupon in probably 7-8 years, and I used to be an avid user of Groupon too. But nowadays, I just don't know how many people actually use Groupon. So maybe take the time to look at the financials and the fundamentals to get an idea of how strong they are and how healthy they are. But I mean, on a macro view, this is still not a chart that I would buy. I mean, it's down. Was it really trading at 500 back in 2012 on IPO? I don't remember that. Yeah, I mean, you could take small position on commons. There is obviously some very nice volume being traded on this within the last 3 years, but I think maybe a target of 24 is viable long term. But I'd like to see a pullback and a confirmed hold of at least 10, 8 to 10, to provide some better confirmation in terms of longer term targets. Cool. All right, awesome, guys. We're gonna make this stream a short one, I guess. About 30 minutes. It's pretty good to get through all this. If you guys have any questions, again, you can always feel free to DM me or tag me in chat. And if you guys enjoy this content, please like this video, subscribe to the channel. You guys know I really do enjoy putting out content, so I'm looking to do more of these. And I would appreciate it if you can show your support by liking it and subscribing to the channel. Cool. I will see you guys.